Good morning, Brazil and the world. This is the New Perspectives webcast for the first time coming in English. This is we leave open this first slide because we have we have a lot of people who connect via video and don't connect via audio. So we just leave the slide open for a moment for people to connect via. Just make sure they realize they have to connect via audio as well, because there's two connections, one for the video and one for the audio. So just I guess for those who are having problem with the audio, just you have to connect separately for the audio, for your computer audio to work. So I guess just some logistics in the meantime. So this is a webcast. It's opened for anyone who wants to join. It's completely free. We're broadcasting here from São Paulo, Brazil. The theme today is going to be in relation to FPIs, foreign private issuers, companies listing in the U.S. The agenda we have for today, we'll just go through the schedules, a few main themes, some reminders, and some news. So the webcast goes from 9 until 11 a.m. São Paulo time. This is a formal training. Whoever wants certificates, you have to stay connected for at least 1.5 hours of the 2 hours to get certificates. For those people in Brazil, this is a formal training program, but you have to stay connected for 1.5 hours, and also you have to pass the exam at the end, so you have to get 3 of the 4 questions at the end correct. So we have with us today, so I'm going to do the initial survey. We have with us today Christiano Santos. Christiano, are you on the line?
Yes, I'm here. Good morning, Kieran. Good morning, everyone. Can you hear me, Kieran?
Yeah, can. Good morning. So Christiano is a partner in CMAS PwC Brazil. We have also Wayne Carnall, who's consultant, retired partner from PwC US and the former chief accountant at the SEC. Wayne, are you on the line with us?
Yes, I am, Kieran.
Okay, that's great. And also we have Guilaine Saroul, who's a managing director at PwC US, a specialist in filings with the SEC, who works in filings with the SEC. Guilaine, are you on the line?
Yes, I am, Kieran. Hi,
okay.
Everyone. Thank you.
Great. And at the end, we're going to have the knowledge test for scoring for the the test for the CRC, and you've got the contacts at the end as well. So I guess the themes that we're going to try to look at today is why do companies want to access the U.S. capital markets? How do companies access it? What is a foreign private issuer and how do they differ from domestic registrants? What are some of management's responsibilities for a foreign private issuer? How is the initial registration process with the Securities and Exchange Commission, with the SEC? How does the SEC interact with FPIs? So as we said, this is formal training. If you want a certificate, you have to be connected at least for 1.5 hours. And then for those people who want the certificate for formal training in Brazil, then you have to stay connected for 1.5 hours and get 3 of the 4 questions correct at the end. For those people who want to receive the invitation for future webcasts, we have here the BR underline Novus Perspectives 2019. So if you want future invitations for future webcasts, just send your email information to there, and we'll send you the invitations for the future webcast. So, during the pandemic, our theme here is keep calm and carry on. Our idea here is to help the companies and help them through this difficult time and I guess everyone help those that are in difficult times get through this pandemic. Some just sharing here some information. So there's a number of different information sources. All of these are free. You can access them via the internet. The first is CFO Direct. CFO Direct is a free website. It gives information on the U.S. capital markets. So it also gives information on I guess U.S. regulation and also on IFRS standards. It's and just sign up and you receive. It also sends you like periodic information. We also have the site for SEC comment letter trends. We're going to talk a little bit later about SEC comment letters and how they interact. The SEC interacts with companies listed with the SEC. So you can you have that website whereby you can see what sort of trends we have with the SEC. For accessing the U.S. capital markets, we have a publication, a roadmap for an IPO, access to going public. So it basically explains the process to going public in the U.S. We also have a guide in terms of the listing requirements for the New York Stock Exchange, NYSE, and also for NASDAQ, which is a separate publication. And on these, I guess what I didn't mention was that this webcast is being recorded. It will be available for anyone who wants it afterwards, and anyone who wants the slides will can also have access to the slides. Other publications, we have also a publication for doing an IPO in Brazil in English. And an interesting thing here is that a couple of weeks ago, it was announced that as well we have a number of Brazilian companies who are only listed in the U.S. and not listed in Brazil, and they now, I guess, all foreign companies have this opportunity, but they can, I guess, there's the Brazilian Depository Receipt Program, and so now the companies, even we have a number of Brazilian companies who have a holding abroad, and they can now list in Brazil via the BDR program. Which was something that was permitted as from a couple of weeks ago. So, and then I guess more available information. There's a lot of information on comment letters, compliance disclosure interpretations, CF disclosure guidance, SEC staff review, common financial issues and facing smaller issuers, areas of frequent staff comment for financial institutions, and then best practice for work with SEC staff, and then the financial reporting manual, I guess, which is one of the key pieces of, I guess, almost like the rule book for the foreign private issuers. And then I guess just let you know that the next webcast that we're going to be doing is going to be on the October the 7th from also 9 a.m. to 11 a.m. Brazilian time. We're going to be talking about international security offerings. We're going to have with us Katina Costa, Guilaine, Kyle, and myself. And I guess we start with our survey. So we have just as a warm up here, we have 6 survey questions. Just wait for a second to pop up. Okay, so first of all, I guess which country region is your company incorporated in? Also, we have like Brazil, Mexico, Central, South America, other than Brazil, Canada, Europe, Asia, and others. And I guess just the idea here is to see, and it's interesting that we have even a number of companies that have operations almost exclusively in Brazil, but they have holdings abroad in different parts of the world. So I guess the idea here is to identify, the different locations of people we have, I guess the different types of companies we have listening in today. And then we've got a time on this of 1 minute 13. So And then we'll come in later. We'll be talking about which countries have the most foreign private issuers and where they come from. So the poll has just ended, and then the system takes a few seconds just to process the answers, and then we'll just show you it'll come up the answers in a minute here. I guess it shows where the company, where we have the various companies from. I'm assuming that we're going to have I guess as expected, we have like over 90% coming from Brazil here, and a few from different from other countries around the world. Okay. And does your company have plans to sell or sold any securities in the U.S.? And then you can choose from one or more below. So securities into the U.S., you could do securities under like almost like a private offering, normally made to QIBs, to qualified investment bankers under Rule 144A or American Deposit Receipt Program Level 1, or else you can have American Deposit Receipt Program Level 2 or Level 3 or other. And then the idea here is to identify the various types of the various types. Obviously, those companies who list to raise capital in the U.S. With the public would normally be on an AD or Level 3 program or similar. Those companies who just have a secondary offering would maybe Level 2, and then however, we have a lot of companies who are in the U.S. on 144A and similar programs. I guess the poll has just ended, and then it's just processing the replies for this. So it's interesting that with the most popular one was the other. I'm just wondering what other programs people were accessing the U.S. markets under, and like the 144As were also quite popular, and much fewer people under the Level 2 and Level 3. And then here I guess we're talking about the principal uncertainties. I guess which are the principal uncertainties generated and as a result of COVID. One of the big things in the U.S., obviously one of the principal concepts is the concept of transparency, and there's a lot of discussion currently in terms of the disclosure for companies around the various uncertainties brought by COVID, and then the ideas for those, which are the areas that are bringing most uncertainties for your company in terms of COVID. And then we have the most popular areas. I was just about to finish the timing for the poll. So the poll just finished. So it's processing the answers now, and it'll come up in a minute. And then one of the discussions is like what are the disclosures around the future uncertainties created by COVID, and I guess for different companies they have different uncertainties for different reasons. And here the objective was to try to identify, and you can, I guess based on this, you can see that a lot of most popular uncertainty was revenues, followed by employees, followed by financing and cash flows. Well, the companies are having having a lot of challenges on obviously on their cash flows in this time. Next question: what do you consider are the principal challenges in your next annual report, for example? And then the and then there's a number of and I guess the question here is for those annual filers. What are you thinking about? What are going to be the main challenges in terms of the next annual report? So here we're talking about we have simplify the content to identify all necessary information, to verify the information, explain the impact of COVID-19, explain transactions, i.e. acquisitions or sales, and reporting by April 30th. I guess in Brazil we've had delays in the reporting timetables for due to COVID, and I guess our companies are they expecting to have issues relating to their annual reports for this, or do you think they're going to be the FPIs who with the December year end would have a April 30th deadline to report by? So I guess the poll just closed, so we're just going to wait here for a few minutes for the result of that. So we've got here. So the most popular one is explain the impact of COVID-19. I guess that's going to be the main issue for the companies this year. And has the company discussed any of the following items in the last year? And here the question is, I guess, what if there's been a potential change in category, for example, EGC to accelerate filer, if there's been change in segment information, change from FPI status to domestic issuer, change in the base of information presented, change in functional currency, i.e. from local currency to dollar, first year audit of internal controls, or even listing or delisting. I guess just get an idea as to what I guess in terms of, because I guess each of these have various implications related to them, and the idea here is just to identify which of the items are generating most discussion at this time. I guess each one of these items has a series of different implications related to it. So we're just arriving at the end now of the poll. Finished. Just give us a minute for the result to come up on this. So the gosh, so those are fairly spread out, and I guess the numbers are small because I guess each one of these is quite a significant decision, but a number of people listening have reported items on a number of these. I guess the first year audit report in internal controls, I guess, was one that's most discussed, maybe followed by change in preparation, change in segments. I guess, but in general, I guess relatively few on these ones. And then which financial statement related items generated the most discussion in relation to next annual filing? So which are the items that are giving most discussion? Non-GAAP measures, like EBITDA, adjusted EBITDA, COVID disclosures, revenue recognition, segment information, impairment or going concern, business combinations or internal controls. Anything? Also, I guess which ones of these are giving most discussion in relation to the next annual filing? And I guess so this is the last question, and then once we're finished with this, then we're going to get into it. a presentation by Christiano. So we're just coming to the end of this. It's coming to the end. So the poll's closed, and now it's just processing the answers from the poll. So the results should just come up in a minute as to which of these are generating most discussion in relation to the next annual filing. Guess which of these are giving the largest challenges. So there again, the leader is the COVID-19 disclosures, and closely followed by impairment going concern. And I guess all of the rest are much lower and much less relevant within this context. I guess with that, then, with that, then we'll go to the. So Christiano, then it's over to you. Christiano, hopefully you can have control of the slides, and you can just see on the left-hand side the control of the slides. You can move up and down.
Yes. Can you hear me, Kieran?
Yeah.
I think I'm controlling the slides pretty well. Okay. So, well, first of all, I'd like to welcome Guilaine and Wayne to our event. I mean, over the years, they have given tremendous contributions to our clients, so I'm delighted to participate in a webcast with them. And also thank you, Kieran, for the invitation for this webcast. Selling securities in the United States. American depositary receipts are probably the simple way for American investors to have international companies' stocks on their portfolios. This should be a opening statement here to set the scene on what we'll be discussing. So, how should a company pursue an opportunity to reach this market, who is so significant from a global perspective? Through a Rule 144A depositary receipt. The idea is that, there are some simplifications here, and the idea is that sophisticated institutional investors wouldn't need to have the same level of information and protection that individuals would require, given the structure that they have to analyze potential investments. So 144A rule, it provides some mechanisms to sell this shares, privately placed securities that don't have or are not required to have an SEC registration in place. And it will definitely create a more efficient market for the transactions of those securities. So this is definitely something very popular here in Brazil. I was linking this with one of the questions in the poll, and I was curious to see, as you were, the other alternatives that the investors would be pursuing here. The issuers would be pursuing here. So,
I'm just thinking here because one of the issues that we were discussing is whether the companies actually know that they have securities in the U.S. under 144A. I guess a lot of companies don't know it. I think whenever you have like an ADR level 2 or 3 and you're registered with the SEC, you certainly know about it. I guess those companies that are registered and subject to SEC regulation directly, I guess because of that regulation, they normally have a lot of work to do to meet those requirements.
Indeed, and we'll discuss a little about that. So 144A rule, it modifies some SEC restrictions. So private placed securities, for example, can be traded among qualified institutional buyers with much shorter holding periods. and no SEC registration in place. So when it comes to ADRs, what is they sponsor ADR? So they sponsor ADR. The concept behind it is that there is a bank that will be participating in the transaction to provide guarantee on the transaction. So there is a bank that issue on behalf of this foreign company. Equity serves a kind of underlying asset for these ADR. So a sponsor ADR will definitely create a legal relationship, per se, between the ADR and the foreign company, with brings, as I said, a bit more transparency and security for the transaction, as opposed to this sponsored ADRs. We could have this unsponsored ADRs, but those will be traded only on the OTC, the over-the-counter market. I mean, that would preclude transactioning probably most of the major exchanges. Is more speculative, I would say. So when it comes to ADRs, I think let's discuss a little the different kinds of ADRs that we have. So level 1 is the most basic type of ADR that is used to foreign companies that either don't qualify or don't want to qualify to have the ADR listed on an exchange. They cannot be used to raise capital overseas. They are found on the OTC, as I said, and they have more flexible requirements when you look, for example, on the requirements of the SEC, and we will discuss this a little bit further on. And it does represent, in the end, an easy and an alternative with less costs for the issuers, definitely, because they don't need to comply with a number of SEC requirements. So it presents itself as a interesting option for the issuer. So moving ahead to level 2 and 3, which are categories that you need to register with the SEC. So they also will provide the issuer with access to the U.S. market, but in a different way. So level 2 can be used to establish this presence similarly to level 1, but also they cannot be used to raise capital. They will have a bit more requirements in order to comply with SEC requirements if you compare with the level 1 ADRs. And they will, I mean, comparatively give a bit more visibility and trading volume to the issuer. And ultimately, level 3 is the most prestigious, per se, level of ADR, which is used for capital raising in the U.S. market. So it involves issuing shares in the registered shares in the U.S. market. And here we will be talking a company that will be fully reporting with the SEC and below all the requirements of the SEC regulation. There are other ways to access U.S. market as well. I mean, in the last bullet, we see reverse merger and special purpose acquisition company. I'll go through them briefly. I mean, a SPAC is kind of a transaction when it's a company, a shell company set up with no commercial operation and is formed strictly with the purpose to raise capital and subsequently acquiring a company or a business. So this is what would happen. And this reverse mergers is when we have a listed entity that is dormant that will be acquired by a private entity that will later on effective a reverse merger and become the listed entity. So these would be the ways that primarily an entity would be accessing the security markets in the U.S.
Yeah. I think we've got quite a few slides to cover in the next few minutes.
I'll try to be I'll try to be a bit more.
Christiano.
Yeah.
Christiano, I was just wondering if I could share an observation to the point that Kieran was making, that perhaps the company may not even be aware that they have an ADR program in the U.S., and I think that is certainly a distinct possibility. Because the company can have an ADR program that was sponsored by one of the banks, such as Bank of New York, that was created totally absent any capital raising transaction in the U.S. So you can have an ADR program established by the bank simply to facilitate trading in the secondary market. In fact, I would expect that most of the larger Brazilian companies have some sort of an ADR program in the U.S. because it requires virtually no incremental reporting other than to prepare their financial statements and make them publicly available, generally on their website, in English. So if a company is wondering whether they have an ADR program or not, they can simply go to the SEC's website, look up their company on Edgar, and see if they can find themselves and see if a Form F6 was ever filed, and that would indicate that they do have an ADR program. There are some companies that have what they refer to as unsponsored ADR programs, and that is when a bank forms it without the company's even knowledge or participation involved with the process. But as you indicated, most of them are in fact sponsored. And one of the things that is interesting, because when companies are looking at accessing the U.S. market, one of the items that they will frequently consider is litigation risk. And in the last couple of years, the federal courts have allowed private action, so companies being sued, simply when their only presence in the U.S. was a sponsored ADR program. So it is a kind of an evolving area where it does have greater risk than it would have done a few years ago. But again, many of the Brazilian companies do have sponsored ADR programs and have not necessarily raised capital in the U.S.
Yeah. Wayne, that's true. And remember once looking down a list, I think it was on the on one of the websites where they had a list of Bank of Mellon on Mellon's website, and they had like a list of ADRs by country, and then I looked up Brazil. And as you said, like most of the big Brazilian companies, had ADR programs, and
right.
and I'm not sure if they really realize that, as you said, the potential risk that they have related to that, and the implications that are related to that, because companies normally just think about being listed with the SEC as being in the U.S. market.
Yeah, to that point, Kieran, I would advise companies these days, given that the risk profile is changing, is they should discuss it with their U.S. Securities Counsel, whether there'd be any advantage to discontinuing the sponsored ADR program and just having an unsponsored ADR program. Because by sponsoring a program, the courts have ruled that you're actually basically trying to access the U.S. capital markets, as opposed to being not engaged in participating with an unsponsored program. I'm not sure it really makes much of a difference in terms of the trading activity that a company may have whether it's sponsored or unsponsored. But it is something that is worth discussing with a U.S. lawyer about whether there's any advantages to that. I don't want people to be overly paranoid. It is still relatively rare that a foreign issuer gets sued that doesn't have a listing in the U.S., but it has happened on a few occasions in recent years.
Okay.
All right.
Great.
Yeah, and also, I mean, moving on this slide here, I mean, try to cover what would be the definition of an FPI, a foreign private issuer. So I'll try to go through the main aspects here, but definitely we can go through in more detail if one have more doubts for each case in the Q&A session. So it's definitely a non-US entity, except that that meets those conditions. So first of them, more than 50% of the outstanding voting securities should be owned by residents of the United States, and any of the following conditions. So majority of the executives are United States citizens or residents, or more than 50% of the assets are located in the United States, or the business of the issuer is administrated principally in the United States. So the idea here basically is that if you are a foreign issuer, you are deemed to be an FPI unless any of those conditions are met. I mean, item number 1 would then exclude the entity to be an FPI by definition, or and you would need to have any of the ones pointed out in item number 2. I mean, the majority of the executives or directors being United States citizens, American citizens, 50% of the net assets located in the United States, and the business being administrated principally in the United States. So this is a definition to see if you can fit yourself in the definition of the FPI and benefit from being an FPI, which we'll be discussing in a minute.
Cristiano, it's Guilaine. If I may just add one little point here. The test is done every year at June 30th if you're a calendar year end company. So this is a good time right now, as we have our webcast, just to confirm, that you are an FPI if you are, or if you're looking at the transaction, to make sure there's no change in status. We have seen quite a few companies changing status with everything happening around the world. So I just want to make sure that people, keep in mind, if they're a calendar year end, which I know Brazil has a lot of calendar year end companies, that you do the test as June 30th based on the criteria you just mentioned. And the other point there, Cristiano, that, I think we see a different profile as well these days out of Brazil, with more companies like Kieran and you mentioned that are just listing in the US, like they do IPO just in the US, and then now they may consider, like you said, Kieran, to have a program in Brazil. But because of that, they will be meeting the first criteria of having more than 50% of shares very quickly if they're only listed in the US. So then you look at the other points from in the test. So 2 things in the profile is changing, and don't forget to look at your test at June 30th based on if you have major transactions as well. It's always a good time to make sure you review it as you are going to cover. There will be quite differences if you have to switch from being an FPI to a domestic entity.
Yeah, those are definitely great insights, Kieran. Thank you very much. And this is really important. It's a great moment to look through and update this assessment. So what would be definitely the reason for making this assessment, and then the benefits of being an FPI, or the obligations of not being an FPI? So the ability of using either US GAAP, IFRS, or local GAAP, if you were in a country that has not yet adopted IFRS as the local GAAP. The ability to present in Brazil, as you know, CVM adopted IFRS for consolidated financial statements for listed entities. So since 2010, the ability to present financial statements in any reporting currency as you consider appropriate. Quarterly reporting wouldn't be required. I mean, of course, we need to consider, and we'll be covering these later on, that if you provide such information in your domestic market, you would be you have to provide similar information in the US market through a specific form, 6K. And also, I mean, the same would apply to a Form 8K. I mean, Form 8K would must be filed normally within 4 business days after changes in, I mean, such as board of directors, independent auditors, but there is a waiver here for FPIs, exemption for proxy rules. I mean, to deal with some Sarbanes-Oxley, for example, fair disclosure and others. Have more time to file financial statements, annual reports. We will cover that in a subsequent slide as well. I mean, and therefore financial information gets obsolete more slowly because you'll be filing financial statements in a different way. Confidential filing consideration, I mean, something that has been adopted in the US market. So assessing the market in the US have these characteristics as well. And the ability to access other exchanges by using depository receipts, such as Brazil, London, and other markets. Yeah. So a bit more detail on these discussions of the 1934 Act, which is basically what regulates the transactions in the secondary market in the US. I mean, we discussed about this bigger time for filing financial statements. So when you're FPI, you have 4 months after year end, whereas if you are a domestic issuer, it can vary from 60 days to 90 days, depending on the type of listed entity you are. If you are an accelerated filer, for example. What else?
Yeah. No, that's fine. I think that the vast majority of companies, they use IFRS nowadays, and I guess very few of them use the reconciliation. And then I guess on this next slide, they have
we covered that already. I gave some information about the quarterly information, the Form 8K. Not being subject to SEC proxy rules as well, which is a huge benefit for FPIs. Elimination of US GAAP reconciliation, I mean, since 2007, if I'm not wrong, is no longer required for IFRS filers to be reconciling information of your local GAAP to US GAAP. So it also facilitates a lot the access to US market. And here some other, I mean, I would not be so technical, but here's a list of some other information or regulation that an FPI would need to comply with in rules 305, 309 from Regulation S Act. The indefinitely extension of Instruction G for the first-time adopters of IFRS that gives you some waivers to use to present only 2 years in your registration document. So basically, this is an idea of the simplifications that an FPI would have by being classified or acknowledged as an FPI. So here, some countries, I mean, we saw in the poll people from all around the world. So here is a list with significant numbers of FPI in the U.S. market. Brazil is among these countries, as well as India, Mexico, the Netherlands. And finally, some challenges that here is important to focus on. What are the challenges for the SPI from our practical experience? Definitely, although there are some simplifications in regulation, and I think we will cover that in Wayne's and Guilaine presentations, Q&A sessions. U.S. regulatory environment is still a challenge. SEC filing requirements, definitely, I mean, they are more complex than we have locally here in Brazil. Financial statement requirements, we need to be looking by analogy by a number of times what the SEC requires. Internal controls, depending on the level that I have on my ADR, investigation restatements, that might be a nightmare if you don't, if you have trouble with this. And comment letters coming from the SEC, that also is something that you need to be cautious on from the issuer perspective. So, Kieran, this is what I will have to say. I'll hand the word to you again.
Okay, great. Thanks very much, Christiano. I guess, Guilaine, maybe. And Wayne, maybe Guilaine, first, do you want to tell us something a bit about your experience with FPIs?
Sure, happy to, Kieran. So I think, as you mentioned, I'm a managing director in our national practice in the U.S., located in New Jersey, and right now located in my home in New Jersey. And I have experience for over 19 years, especially with multinational companies and foreign private issuers. I work mostly with, or most exclusively with foreign private issuers from around the world, and almost exclusively with the ones that are filing under IFRS. So I do a lot with Brazil and many of the companies involved here. I'm as well one of the two representatives of the IPTF, so the International Practice Task Force, which meets with the SEC on a regular basis. So this is the organized by the Center of the CAQ, the Center of Audit Quality, and with the other big four firms and the SEC. And we have coming meetings in November. So we just wanted to mention that as well. So
yeah, I mean that's interesting. I think at least in Brazil we had a lot of interaction in the past with the International Practices Task Force in terms of issues that were raised and so forth. And I guess this is one for Brazilian companies that I guess they should be aware of. This is a forum of discussing specific specific country issues with the audit firms and also with the SEC. And I guess there's a number of discussions in relation to Brazil that occurred in the past in that environment.
Correct. And there's a lot of topics, and especially with all the new type of transactions and listing you mentioned, this is definitely a task force that focuses on sharing the information and discussing any emerging issues. And these days, this is mostly related to foreign private issuers reporting under IFRS. So definitely any issues or any things you are interested in or sharing, please reach out to us. We're always happy to help there. And make sure you look out for any highlights or summaries there as well.
Okay, great. And Wayne, maybe if you could tell, I guess, us a bit about your experience and with FPIs, I guess, more over the last few decades. Sorry, Wayne, I think you're on mute still.
Thanks, Kieran.
Yes.
Again, thank you for inviting us to this. I have been doing this for quite a while, as you mentioned, and it does go back at least 3 different decades. First time I started getting involved with foreign private issuers was the first time I worked at the SEC back in the early 1990s. And that was at a time when the number of foreign registrants was exploding in terms of companies from around the world coming to the U.S. The SEC actually at the point was out marketing. They were trying to encourage foreign issuers to access the U.S. market, and so investors would have an opportunity to invest in companies outside of the U.S. So it was a fairly unique time. I got involved with drafting a number of the rules that foreign private issuers are subject to, both capital raising and their periodic reporting requirements, and we were doing a lot of rule writing at the time. The task force that Guilaine was mentioning, I actually helped form that back in 1992. Again, at the time, it was interesting. The first Brazilian company, Aracruz, registered back in the early 1990s. And this was a time that I'm sure many of the people on the phone call will appreciate much better than I, but Brazil was subject to very, very high inflationary conditions at the time, and these financial statements that companies were preparing were almost incomprehensible by most Americans who were not familiar with inflation reporting. Interesting, Kieran, you mentioned that, that a number of these issues were Brazilian issues were brought before the task force. Many of those issues actually related to inflation and accounting, and some of the quirky aspects that Brazil was actually applying at the time with a number of different indices used by different companies that made comparability very difficult. So hopefully we'll never see a time like that again, but that was a number of the issues that the task force was addressing. So in addition to working at the SEC for 9 years and working with a number of foreign private issuers during that time, for about 11 years of my life, I worked almost exclusively on foreign private issuers, traveling around the world, down to Brazil many times. But again, working with companies all over the world on various issues. And in the last 8 years, I probably spent half of my time working on foreign issuers and half of my time on domestic issuers.
Right. And when, maybe in that perspective, tell us why why these companies would be considering listing in the U.S. markets.
Kieran, I think that, coming into the U.S. market, it's really part of a decision that a company makes whether they want to be public or not. And that is basically, there's trade-offs. There's a cost-benefit analysis. There's certainly an advantage to coming into the U.S. market. The U.S. is by far the largest market in the world. I think our market capitalization is currently about $35 trillion, which is a staggering sum. It's far greater than any other country. So when a company is considering doing an offering, if they want to tap the U.S. market, it actually does increase their liquidity. It was Christiano was mentioning some of the differences between doing a public offering or doing a 144A offering. I believe probably the 144A market is considered very attractive by foreign private issuers. The public markets, to be listed on the New York Stock Exchange or NASDAQ, I believe theoretically and conceptually has a greater liquidity because you can have access to a greater market. But I think a number of companies find that incremental difference, that incremental benefit of pricing might not be worth the incremental cost of being subject to the SEC's periodic reporting requirements. So that's an analysis that a company that's considering an offering should evaluate. They should consider what is the benefit of coming in and registering with the SEC versus the cost, because there's clearly both a benefit and a cost from doing that.
Yeah, I guess, and maybe just whenever you say the cost, I mean, maybe it's worthwhile just commenting. I remember in the past, people used to say about the level of regulation, even in terms of financial statement information, that like US GAAP was something like 25,000 pages and IFRS is was like 2,500 pages, and it's just like maybe just about because it's so, I guess, about the level of regulation that exists in the U.S. market, and maybe what difference that would be for foreign entities.
Well, I do believe the SEC has tried to, I'll call it, balance some of these needs and the benefits of raising capital for foreign private issuers. There is no question that back years ago, back in 2007, when the SEC eliminated the reconciliation requirements and allowed foreign private issuers using IFRS to access the market without providing U.S. GAAP information, greatly reduced the cost of accessing the U.S. market. Companies no longer had to keep two sets of books. They could come in with their primary financial statements under IFRS, and that's what a very large number of companies do. Almost no company reconciles to U.S. GAAP. They either use U.S. GAAP or they use IFRS. So that has significantly reduced the cost. But there is also no question that there is incremental cost to being a registered company versus not a registered company. And some of those costs are not just I'll call it the cost of preparing information or the cost of compliance. There is obviously the increased litigation risk that companies do need to consider.
Maybe on that point, Wayne, right? I think just so people have a sense, the use of IFRS these days is definitely quite understood in the U.S. market and by the SEC. And so definitely I agree. I think we have like maybe between 2 or 5 or identified between 2 or 5, maybe less than 10 for sure, that use a reconciliation. And based on the use of IFRS around the world, including Brazil, Europe, South America, Australia, almost all those companies from those territories these days will come using IFRS. And the point there is it has to be IFRS as issued by the ISB. So no local variation of IFRS. But just wanted to highlight here that this is definitely more and more an increased use of IFRS in the filing with the SEC.
Yeah, and I guess I didn't mention, for the participants who are watching here, we have a chat, so please feel free to send your questions in on the chat or the Q&A section for us to answer them. I guess the other thing, is it like common for foreign companies doing IPOs abroad to sell securities in the U.S.? For example, we have like a lot of Brazilian IPOs in the local Brazilian market, and then could there be then simultaneously an offer in the U.S. with a 144A?
There certainly can be. That is not uncommon. Kieran, the way the U.S. securities rules work, and it's very, I'll call it very broad, but I'll understate this a little bit for simplicity, but the rules start out with this presumption that every company and every transaction should be registered with the SEC unless there's an exemption. And there's lots of exemptions for foreign private issuers. Christiano was talking about some of the differences in the requirements between a foreign issuer and a domestic issuer. Probably one of the most overarching differences is that if you're a domestic issuer, there are transactions and times when you have to register with the SEC, even if you don't want to. If you're a foreign private issuer, for the most part, much of the reporting is purely voluntary. It's a company wanting to be accessing the U.S. market. So again, it's not uncommon for a company to want to offer securities in the U.S. Through a 144A if they're offering securities in Brazil or other parts of the world. That is a very common transaction. Sometimes companies that don't want to tap in the U.S. market will rely on, they're doing offerings outside of the U.S., will rely on a safe harbor provision referred to as Reg S. So there could be activity in the U.S., but they're not targeting the U.S. market.
Yeah. And is it normal for companies, for example, if they're thinking about doing an IPO in the U.S., would they normally try to, first of all, access the market via like a 144A and then transition into an IPO, I guess, to get themselves known initially? And I mean, is that a common theme?
You know, it's certainly not uncommon, Kieran. I have seen companies that have done 144A offerings in the past that have actually become registrants. I have seen some companies become just simply registrants that have not tapped the U.S. market. So I don't think there's certainly no restriction. There's no one size fits all for companies. I think it depends on a lot of different attributes, including the company, their need for capital, as well as I do think the markets are always constantly evolving. One of the items that Christiano mentioned were special purpose acquisition companies. And what those are, and this is, I'll call it, they've been around for a while, but they have gained in popularity enormously in recent years, where a significant, very significant number of transactions, capital raising, IPOs, are by special purpose acquisition companies. And what they are, it's a shell company. They go out, they raise money, they put the money in trust, and generally for a 2-year period, they will look to make an acquisition with that money. In years gone by, what normally would happen is they would take that money and they would actually go out and make an acquisition. So the SPAC would actually buy a company. And so the money went to whoever were the owners of the company. What's happening now, it almost is a form of capital raising by an operating company, because what they will do is they will merge with the SPAC, and so they will obtain the capital that the SPAC has raised. So they do a share exchange, and the money stays within the company. So it's a form of capital raising by the operating company. One of the things, though, that is very important, if a company is considering a transaction with a SPAC, is to understand the legal structure of the transaction. Because you could have a situation where an operating company in Brazil can merge with a SPAC in the U.S., and even though 100% of the operations could be in Brazil, depending on the structure of the transaction, it could become a domestic issuer and be subject to all the reporting requirements of a U.S. domestic issuer. So legal structuring in these transactions can be very, very important.
And if a company is thinking about accessing the U.S. capital markets, I mean, what's the first step they take? What's the first contact that they make in terms of thinking about getting into the U.S. markets?
You know, again, Kieran, I would say that there's probably not a one-size-fits-all. Certainly the accountants are frequently one of the first contacts, because the accountants have been involved with the company for a number of years. So the accountants can frequently be involved. It's also going to be very critically important that the company obtain competent U.S. counsel, people that are familiar with accessing the U.S. markets. There are a number of law firms that practice extensively in Brazil. So making sure that your lawyers know the requirements and have done this before is going to be very, very important. Obviously, the company will have a group of bankers that will be involved, that will, we'll call it, take a lead in any capital raising transaction. There's generally a whole group of people that are involved when a company is going to be doing a capital raising transaction.
And maybe on that point, Wayne and Kieran, is just to show a little bit more like the process step by step, right? The company will really, if they do want to access and be public in the U.S., they're going to do a filing, which is a prospectus with information offering memorandum with details about the company, the business, the financial statements. Reason why Wayne was mentioning just now that the accountants are usually one of the first in line, because you need a good set of financial statements to access the U.S. market. And this will be then a filing with the SEC. Whether you're an existing registrant, then you will continue doing those filings that Christiano was mentioning before. And all of that is subject as you go to the SEC process to get listed, to a review process by the SEC, and then comment in there. And all of it is, you have a choice as well to do it confidentially or public. And at some point you will become public, so the information will be in the public domain. So just kind of the couple of the steps, and happy to go further if you wanted to on that.
Okay, and I guess and it's interesting you're saying Wayne was commenting about the SPACs becoming more popular. It's interesting. We haven't seen, I guess, many operations of this nature in Brazil, although we have got some questions about it recently. So maybe that's something that we're going to, as you say, there's a wave of that coming, and maybe I guess as well, if you could maybe just tell us about some of the creation of the FPIs and some of the challenges faced by the FPIs. I mean, do a lot of these companies, I guess, because you were commenting on the SEC, they changed a lot of the regulation to make it easier for the foreign companies, and is there still challenges for foreign companies accessing the U.S.? I mean, what would be, I guess, the typical? There was a list of challenges. I don't know if you want to give Wayne some color around those challenges for foreign entities.
I think, Kieran, anytime you're coming into the U.S. market, there's going to be cultural issues that can be different in the U.S. market versus different markets. Just as it's a part of life, if you would, that there are going to be cultural differences, and so companies do have to recognize that when they are coming into the U.S. market, there's certain expectations. The SEC does not merit regulate. They don't prevent companies from raising capital, even if companies don't have I'll call it a good plan. The important aspect is disclosure. Companies have to be very transparent with their disclosure. Sometimes they have to be more transparent than they would have in their home country. So again, there's cultural differences that have to be, I'll call it, appreciated and understood probably first when coming into the U.S. market. But what is going to be very important is if a company is wanting to come to the U.S. market is to get a group of advisors that can help them with the process. Because they are going to be running into different challenges. There's going to be aspects that companies may not have thought about. There could be incremental reporting that they may not have considered, and so there are definitely going to be certain challenges to that. And one of the differences that companies have, and one of the incremental costs of coming into the U.S. market that doesn't exist in most other countries, is the requirement to report on internal controls over financial reporting. Both the company has to report, as well as assuming they are meeting a certain size, and most companies from Brazil would meet this, so that the auditors will also have to report on internal controls over financial reporting. I think there's been a great benefit to companies from establishing the control process that's necessary to allow them to report, but there is unquestionably an incremental cost to do so.
We have a question here from Emilio Ferri. He's asking about if it's possible for an FPI to access the U.S. market using a DPO, a direct public offering, as opposed to an IPO, and what would be the risks involved in doing that?
By a direct public offering, you mean just to be listed on an exchange? let's say this would be a direct listing on the New York Stock Exchange.
Yeah, I assume that's what it is.
It's interesting. This has become a very hot topic for a U.S. company to do a direct listing on the New York Stock Exchange. In fact, the Commission has actually deferred certain rules just, I think, like a couple days ago that were going to go into effect as a result of the petition from the Council of Institutional Investors, which is a trade group in the U.S. Now, if a foreign issuer is listed out in another market, so let's say you're listed on the Sao Paulo, there is no question that that company could file a Form 20-FR, registration statement on a Form 20-F, and register under the 34 Act with no capital raising and be listed in the New York Stock Exchange. That has happened in the past. Doesn't happen that frequently, quite frankly, because what's the advantage of just being listed if you're not going to do a capital raising? But that is certainly permissible under the rules. What's the unique issue that they are addressing is when a company is not listed anywhere, and again, this is primarily a U.S. issuer issue, if you would, these days, but you could have the same situation for a foreign issuer, I believe, that's not listed anywhere else, just listing without a capital raising transaction. I view this as an evolving area. I don't have a definitive answer now, but I do think this is an emerging issue. They have, what the SEC has basically done is said if you want to do this, you're going to have to file a 33 Act registration statement in any event. So they're going to treat this just like you're doing a capital raising transaction and have all the liability associated with a capital raising transaction, even though you're not doing a capital raising transaction.
So I guess that's an important point, because like a 33 Act filing with the SEC, I mean that's I guess a lot of information and a lot of work, and presumably a lot of liability goes with that.
I think the big distinction is one of liability. There's not going to be a lot of difference in the substance between doing a registration statement under the 34 Act versus the registration under the 33 Act.
Right. Okay. Yep. Yeah. And obviously, I've seen like there was an article that came out like New York Stock Exchange plan for new IPO alternative wins green light from the SEC. So I guess this is a topic that's, as you say, a hot topic at this time.
Right. Yeah. No, the SEC again just recently approved some rules, but then they put it on hold, subject to a petition by the Council of Institutional Investors.
Right. Okay. Okay. So
but there's no rule that prevents it. There's clearly no rule that will prevent it. It's just the mechanism of achieving it.
Okay. And I guess talking about mechanisms, Guilaine, maybe can you tell us something about the process for getting registered and what sort of what's the process and what sort of getting registered with the SEC and what sort of comments do you normally get?
Sure, Kieran. I think as Christiano covered in his presentation, you will just, whether you're an SPI or not is kind of the first step, right, to understand how you're going to file and do the process. So if you're you want to become a registrant, you will start with filing, depending on the transactions that we just covered there, a specific form, whether it's a 20F if it's a listing without capital raise. It will be an F1 if it is for an IPO. It will be an F4 if you're doing a specific transaction. It might be that you're not, there's processes as well there that, you might be involved in an acquisition, and by being the company being acquired, so you might have requirements, it was very quickly mentioned before, on, other rules like 305 or 309. meaning where you are a significant acquisition for someone else and from an SEC standpoint. So there's definitely a lot of different forms, I guess, that you have to consider depending on the nature of your transaction. But all of them will be submitted and filed with the SEC under whether the 34 Act or the 33 Act, like Wayne just mentioned. And depending on the filing and the transaction, you'll be subject to a review process. You're always subject, but the SEC will focus on mostly on IPOs, new registrations, with a lot more attention because it's the first time, a company entered the U.S. market. So I would expect that if you come for an F1 or F4 reverse merger or just a merger, that you will be subject and you will receive SEC comments. So for anyone that has had the pleasure to receive some SEC comments or not, the process will be that the SEC send a letter to the company who is raising comments on the entire document, including the financial statement. And the SEC will definitely not hesitate to challenge, an accounting position or a disclosure of the filing. And like other regulators around the world, they will review the filings, including, everything that is in there. However, I think few key distinction with what I'm used to seeing outside of the U.S., like in Brazil and others, is that the comments will become, and the responses from the company will become public, whether at the end of the process, if the transaction goes through. So just don't forget that as you respond to SEC comments, that it should be pretty much on point to the question, and it should be really much in line with that, the public information that you want to release. The other point on the SEC comment I will make that is that once you have an ongoing filing registration, so you're an annual report from 20F, the SEC is mandated to actually review existing registrants at least once every 3 years. So if you haven't had or received a comment letter in the last 2 years, there may be a good chance you get one this year. So, and I have been working in quite a few SEC comments with a couple of companies out of Brazil. So definitely there's been some activity on that front, Kieran. So one more point I would mention on the SEC comments is that it can definitely take a few rounds. So the SEC may have a follow-up so doing your best on the first round is always my advice. Don't try to just get away or something in there. It's just do the best on the first round. And it's always best to resolve the comments quickly versus starting to have a lot of rounds about an issue. So a couple of ways there.
Carrie, I just want to share an observation that Guilaine just mentioned about in terms of, responding to the comment letters. And one of the things that I have seen, and this is more for a company that's doing a capital raising transaction versus just responding to a normal 20F review, is that everybody wants to hit the market as quickly as possible. They're going to get a comment letter. They're going to try to turn around the comments as quickly as possible. It's not uncommon that people will work all night and try to respond by 8 o'clock in the morning the next day. And I have seen many situations where companies do a very, I'll call it, quick and dirty and poor job in responding. There might be a particular comment that will require a couple of days for them to gather the information to respond, but the company will take the perspective of, we're going to respond, and if we get another comment, we'll just address it. And what happens at times is the comment in those situations is poorly drafted. The SEC staff will look at it and will say that comment or that response does not make sense, and they'll write a longer comment. And then they'll send a letter back to the company, and the company will try to respond again very quickly. And I've seen situations where the second response contradicts the information they put in the first response, and the SEC staff, becomes very skeptical of the company because it becomes very apparent that they're almost willing to say anything to try to get through the review process. And so the staff will ask a more probing question. And what started out as a very short and relatively simple question is now becoming almost a whole page of supplemental questions. And where a company could have spent a few days longer and responded and disposed of the issue, I've seen situations take months and months to resolve. So I will tell people sometimes the fastest way to get through the response or the comment letter process is to take your time in responding, to make sure that the response is thorough, it addresses what the staff is asking, and that it addresses all of the applicable points. So companies, while they want to be very responsive, should take their time to develop a complete response.
Yeah, I guess that's a great comment. When what we've seen in the local market, I've seen. I mean, obviously, the SEC has like a let's say 1 month period to review an initial filing before they issue their initial comments, and then and I guess culturally, I mean, I've seen in the local market here companies planning on doing their IPO 3 days after receiving comment letters from the local regulator, assuming that they're going to receive comments and reply to them and resolve them all within like 3 days. And I guess in the U.S. market, I guess that's not what you would normally expect. You normally, I guess, expect maybe, let's say, 3 rounds of comments. And I guess the important point here being you have to be very careful with your communication with the SEC to the extent that if you don't give good quality, consistent information, you're likely to go down a path of you're going to go down a path that's going to take much longer. And I think you could even have potential other issues if you start giving inconsistent information to the SEC. You could start discussing getting involved with other departments that are not very much more difficult to deal with.
Kieran, it's one of the things, a couple observations in terms of comments, because I do believe, again, it's very important to accurately respond to the questions that the staff is asking. With that said, this is about as friendly of an environment as I have ever seen from the SEC, even much friendlier than when I was there. The number of comments that are issued to companies is relatively small compared to years ago. I remember there was a period of time when, if a company was doing an IPO, if you go back like 15 years or so ago, 100 plus comments was not unusual. We have seen IPOs come or be registered with no comments or very few comments. So the volume of comments is down significantly. Now, they still ask very good comments, and there can be very thought-provoking comments that require the company to give careful consideration. But the process, I would say, is much easier to raise capital. The current chairman of the SEC, Chairman Clayton, is wanting to encourage companies to list in the United States, both domestic as well as foreign. And the process, as I said, is much easier in that regard. So you're seeing far fewer comments than you would have in the past.
Yeah.
And Kieran and Wayne, on that point, I think I would just mention that I would highlight what Wayne just mentioned here on they still raise very good comments and very probing ones. So I think we see a lot less, in my experience, and I've been through a lot of letters in the last few weeks and months, we see a lot less comments in terms of volumes. But when they have an issue, though, and if they take exceptions to one, they will definitely, it's a lot more targeted, and it's going to be a lot more discussion. So very friendly in general, but I think they will not let it go if they really think, something is wrong, for example. So I just want to mention that there's a little shift there, definitely on being more probing and targeted in terms of comments versus the volume. So whenever people look at statistics, we like, oh, the SEC, will see, and the SEC doesn't comment on as much as before, which is totally true, but there's definitely a lot more focus, and definitely the ones that are very targeted and probing can turn into a lot more challenges. So always keep that in mind, my mind.
And I was looking here that yesterday was Vitro made a public filing, and I remember seeing there was discussions going on to the early hours of the morning. I guess yesterday morning in terms of finalizing that, and I actually see that you didn't have that as one of your clients. I guess it wasn't public until yesterday, Guilaine. But maybe if you could tell us something about the content of this of these comments. What sort of comments are they, and what are the main ones? What are the main topics?
Yeah, sure. So I'm not going to cover any specific filers or company. I don't want to put anyone there, but. Yeah, there is definitely a lot of activities out of Brazil. Like you mentioned, there's a public filing yesterday and others coming through. But we see a lot of comments these days on a couple of topics. Some are recurring that we see all the time, which is interesting to me. Like segments is one that keeps coming back. So, consistency of information between what you see in the MD&A, what is in the financial statements, and again, how does that work? And all the other information that is out there, what the CODM looks at. So I think segments is still a hot topic, which is always, as I said, interesting because the standard has not changed for a long time. We definitely still see a lot of non-GAAP comments and discussion, especially in this environment where companies have been thinking about, the impact of COVID, of what other information they could provide to the markets. And so there's been a lot of discussion on what costs can they exclude from a non-GAAP perspective or what they can include there. So definitely non-GAAP comments and non-GAAP discussion are still very high in the list, Kieran. And I think, I saw in the survey that people are thinking about how they are going to talk about COVID, and definitely something to think about early and discuss with your auditor, your counsel, and everyone, because this is definitely, quite a hot topic right now. The other comments we see a lot, Kieran, these days is, especially with this environment, is around impairment, whether it's a goodwill or other assets. And the SEC will not hesitate to ask a lot of questions about it, knowing, depending on how much, what is the status of the company, what else is disclosed in the financials or not. And so an investor really understands the risk of impairment and the sensitivity around any of the impairment items. So I think they are some of the three key ones that I've seen, especially in the area where it's in Brazil and other places we're talking about. Then there's definitely especially if you do an IPO, and depending on the type of company, you will see comments and questions a lot about the revenue, and it's always a big issue if you have a lot of revenue and specific, very complicated transactions or model. So the revenue is always, a recurring item as well that is on the top of the list.
Yeah.
We just another question. You want to share an observation about impairment, because impairment is an issue that does get a lot of attention. Frequently, much of the attention is on the accounting, whether a company has an impairment of goodwill and will need to write it off. And one of the challenges is frequently if there's an impairment, it's more of a lagging issue, that there's been something that's occurred in the past. And by the time an impairment has been recognized, it might be a little bit late in the process. I always view what is critically important is not so much the accounting, even though I recognize the accounting is important and the staff does ask questions about the timing, but is the discussion and management's discussion analysis. That if a company is going through trouble, it is important that that be communicated in MD&A. So the impairment, while it's relevant and it's important, what's really important is the fact that the business is not doing as well as it was either before or not as well as expected. And that's the critical element that needs to be discussed in the MD&A. And the staff has issued guidance, about the fact that they're expecting called early warning language about not just whether an impairment has been taken, but about a potential impairment. And again, the reason for that requirement is not so much the accounting itself, is to provide an investor with underlying information about the business so they know what is going on and they're not waiting for, I'll call it, this accounting event to take place.
Okay. Yeah, we just got a question here from Paulo Aracaki. Hi, Paulo. He's asking about the is their operation here in Brazil is subject to JSOX in Japan, and then because they're a subsidiary of a Japanese company, they're subject to JSOX, and if they could comment on the differences between I guess the SOX and the JSOX requirements for Brazilian entities. I know these are two different sets of standards and different rules. And the I've seen companies work on JSOX. I guess the impression that I confess I don't have that much detailed knowledge of it. The impression that I have is that it's I feel like a slightly lighter version of internal controls requirements than SOX. I don't know if Wayne, you want to comment on that.
Kieran, it's always funny because I have been to Japan a number of times, and I'm familiar with the term, even though I have to admit I'm not familiar with the underlying requirements. But I just find it interesting the name, they call it JSOX, because SOX is actually an acronym for the two members of Congress that sponsored the bill. So it's a very U.S.-centric concept, Sarbanes-Oxley is how the bill's named after. So it was two individuals. It doesn't mean anything else other than the names of two people. So I always find that the Japanese could have come up with their own name for internal controls over financial reporting. But I don't know the specifics, but I've always understood it to be not as I'll call it stringent as the U.S. Clearly, the requirements that the SEC would hold a company to would be those requirements established by the U.S. securities laws. Okay. I can't really speak to what are the specific differences.
Okay. I guess could you maybe tell us a bit about some of the main management responsibilities in the U.S. regulatory environment for FPIs and the challenges for that?
Management is clearly responsible for preparing the information that is filed with the SEC. And it was interesting, Kieran, one of the things that Sarbanes-Oxley instituted was a requirement for a certification, a civil certification, and there's also a criminal certification that the SEC and the department, not the SEC so much, but the Department of Justice in the U.S. has actually gone after individuals for violating. And the criminal certification is very simple. Basically, it's saying to the best of your knowledge that the information contained in the document complies with the requirements of the SEC. It's a very short, simple certification, but it has a very stringent punishment that failure to comply can result in 20 years imprisonment. It is rare that anybody has ever gone to jail for that length of time, but there are people in jail today for violating that certification requirements. But the more common aspect is the civil certification, what's referred to as the 302 certification, where companies certifying internal controls over financial reporting, they're certifying disclosure controls and procedures, which is more encompassing than internal controls over financial reporting. It tells everything that is in the 20F or else that should be in the 20F. Because one of the things that is important when you're looking at the U.S. reporting requirements where companies can get in trouble, it's not just for what has said that might not be accurate, but what is not said that should have been said. And I always like to tell the story. The first non-GAAP case in the United States actually involved one of President Trump's casinos, back when he owned casinos in Atlantic City, long time ago. And it was, again, a non-GAAP case, and it was for a material omission of information. They sold a restaurant in one of the casinos. They recognized a large gain. And in the press release, they talked all about some of the unusual expenses that they had and did not mention this unusual gain. And as a result, there was an enforcement action, not against him, but against the casino, Trump Casino. And it was for the material omission of the fact that they did not discuss the gain. So when companies are preparing their documents, it's important not only that what they say is accurate, but that they don't have a material omission of information. These certifications came about as a result of Sarbanes-Oxley. However, I've heard a number of lawyers say that it really didn't change management's responsibility, but I do believe it did change the perception of responsibility. And I found that more CEOs and more CFOs were engaged in the financial reporting process than they had been in the past, simply because they were actually having now to sign these certifications.
Right, and maybe Guilaine, could you tell us about some of the principal obligations for the annual, like, normal filing process? I guess the normal filings. What are the forms that are used, and what information is in them?
Oh, and Guilaine, please, add in on this. One of the things that foreign private issuers, I'll call it one of the concepts that they have, is the SEC tried to establish that the reporting for a foreign private issuer would basically be premised on their home country reporting, plus the requirement once a year to file an annual report on a Form 20-F. And the Form 20-F basically is very similar to what a domestic issuer would file. It requires the inclusion of audited financial statements, requires the inclusion of MD&A, requires a description of the business, requires a description of risk factors, and the Commission just recently changed the rules on risk factors. And so there's a number of other areas, but those would be the biggest areas are going to be risk factors, going to be the description of the business, going to be discussion of MD&A, as well as the audited financial statements. In addition to that, again, as I mentioned, that what a foreign private issuer does have a responsibility to do is any other information that they release in their home jurisdiction or to an exchange, that information is furnished on a Form 6K into the U.S. market.
And maybe, Wayne, let me add a few points there on the annual reports and the reporting requirements. Like you said, you follow the Form 20-F, which, I always recommend just really make sure you follow the form. But for the financial statement as well, I would mention that as it's usually a difference with many other entities, two things. One is that it covers 3 years of information of P&L of income statement versus many markets have 2 years. And then it is covered by an audit report for each of the 3 years that are included in the annual report. So I know in Brazil, I have a lot of conversation whenever there is as well a change in auditor, how does that work? So, and based on the mandatory rotations. So there's always something to think about, especially if you are having a change in auditor this year, or if there is any, and that you have consistency or not between your local filing and your SEC reporting if you're in that situation, whether there's a time difference, not a time difference between the two filings. It's something very important to think about as you're planning for the next period, so in terms of exchange.
You know, Guilaine, on that point, one of the other, I'll call it significant differences that a company does have to consider for tapping the U.S. market is the audit has to be done using the standards of the PCAOB, the Public Company Accounting Oversight Board that was established by SOX. And there are differences between U.S. GAAP, PCAOB standards, as well as international auditing standards. And while the standards may be similar in writing, I would say that in practice, there are differences. So if a company had an audit done in accordance with international standards on auditing, they may find that they have to do incremental audit procedures, additional testing to comply with the requirements of the PCAOB. And this can be this can clearly impact the company's timing when they want to come to the U.S. market. Also, another big factor that companies do need to consider is the U.S. independence rules, which are extraordinarily complex. So there could be situations where a company, the auditors could be independent based on the requirements in Brazil, but they may not be independent in accordance with the requirements of the SEC and the PCAOB. So that's a factor that companies do need to consider and should evaluate very early in the process, because if it's simply an auditing issue, you can do incremental audit procedures, but if it's an independence issue, there's generally not an easy fix.
Yeah, I guess that's one of the points. If you're, I mean, one of the basic requirements, I guess, for any, like, be it the annual report or be it an initial filing, is that you need a clean, I guess, a clean audit report on the financial statements for the periods covered, and there's not, you know, I guess there's not much option out of that. And if you have any sort of, I guess in Brazil, because we have like audit firm rotation, that if you have issues with that, then, you know, as you say, it's not an easy fix, and it's difficult for a new auditor to go back and audit under PCAOB standards prior years, and often it's not even possible to do that. And I guess it generates a number of difficulties. Maybe Guilaine, in terms of the other forms of the foreign private issuers, and the concept of making available information in the local market, in the U.S. market, and I guess whenever you say information available, maybe could you tell us something like the typical types of information that would be made available, and a bit about, I think normally it's on a Form 6K, and a bit about the Form 6K and what that process is.
Sure, Kieran. So I think it's important to think about that if you're an existing registrant and you're an SEC FPI, as we just covered, you're going to file annually your Form 20F, and you have 4 months to do that. However, if you release and you are listed as well in Brazil, for example, which is very common, in what I review here is that you will, as soon as information is released as well in the local market, you will put that on a 6K that is furnished to the SEC. So the U.S. investors have access to the same information that local investors and at the same time have access locally. So the reason why, Kieran, like you said, I mentioned the 6K before, or the release of more available information. So on 6K, you will see a lot of, as well, press release, recent developments. This is usually as well if the company provide quarterly information, which is not required, like we said, for an foreign private issuer. However, these days, it's very unusual that companies do not provide actually quarter information or at least half-year information. And the quarterly information will be provided on a Form 6K as well from an SEC standpoint for that information, and could be used for like a transaction or something like that later into a form. So I think that's key, and that's the way, you know, any material events will be as well disclosed into a 6K. So for anyone that wants to see what is released for their company, it's always very easy to go on the SEC website. Back to the point before, if you look at the F6, you know, if you have ADR, you can look whether you have any 6K on EDGAR, and usually there is a lot of them that are done, especially in Brazil, every other day. So,
we've got another question here from Paulo Aracaki. He's asking in terms of on this issue of independence, if the independence requirements for SEC purposes are different from, I guess, the independence requirements we use in Brazil, I guess, under the international auditing standards, and I guess to give some detail for that. I guess, I mean, I've seen this in a number of practical cases that on the international standards, somebody's talking about principles and the concept. And I remember that we had one discussion about it was like services that the auditor was providing for in relation to contingencies to verify the calculation of contingencies under different scenarios, and that this for U.S. purposes was considered to be that depending on how that information was going to be used for U.S. purposes, that would be considered an independence violation. And I remember reading the U.S. rule, and I guess the U.S. rules are very detailed and it's quite surprising. I remember other cases that we had. We had another case that actually two audit firms in Brazil merged. So the company that had audited the financial statements, whenever it came for them, they had to like reissue, because a lot of these cases we have reissuances of opinions because numbers change or because segments change for some reason, and then the company had to reissue, but the two audit firms, one of them was the auditor and the other was the internal auditor. So whenever those two audit firms merged, and then they needed to, you know, the company needed a reissuance of the audit opinion, they simply couldn't do it because under the U.S. standards, the new entity wasn't independent, and they just couldn't reissue that opinion. I remember they had a discussion, I believe, with the SEC on that. I don't know if Wayne or Guilaine, you want to make other comments on that, but I think as Wayne just commented, it's just very complex under the U.S. environment. Is you know, I guess the PCOB standards are very complex, and it's very
they are extraordinarily complex. I mean, I've been doing this stuff for close to 40 years, Kieran, and I learn something about independence almost all the time. I mean, it can be a very complex area. All the major accounting firms have people, large number of people that are working full-time on independence requirements, and part of the issue is that everything has become more complex in terms of how firms are structured. The rules themselves are very complex. There are obviously, you know, a number of issues that are very intuitive that would cause a conflict. There are others that are not intuitive at all that can cause a potential conflict. And there are situations where I've seen companies not being able to go to the public markets because of independence. Seen situations where they have been significantly delayed, that they'll have to have another auditor come in and re-audit the work. So I do think if a company is considering a listing or an offering in the United States, to look at the independence rules or the independence of the auditor as soon as possible, make sure that there are not going to be any problems. Because the last thing a company wants to do is to get very far along in the process and then discover the auditors are not independent, and there's no easy solution.
Yeah. And I guess, Wayne, in terms of companies considering list like an offering in the U.S., I guess any tips for these companies?
Sure. Actually, Kieran, I have my I'll call it my top 10 tips for companies that are considering an offering. And the first thing that what I'll call the most important is to assemble the best team of advisors. And you want to have lawyers, you want to have accountants, and you want to have usually accounting advisors that are experienced with the process. It is now very common, in fact, it'd almost be the exception, that a company would do an offering and not have two different accounting firms involved, one that serves as the auditor and the other that's serving as an advisor that helps them in addressing various accounting issues, various reporting issues, helping them respond to the comment letters, helping them prepare memos to support various accounting issues. So it's important, again, to establish a good team that has worked on a number of IPO transactions in the past. You don't want this to be their first time. The second point that I believe is very important is that while you want to obtain the best advisors you possibly can, is that management of the company doesn't relinquish ownership. Again, look at the advisors and other support people as providing support, but don't relinquish ownership. The company has the most to benefit from a successful offering, so they have to own the process. Number 3 is be realistic with the timing. I have seen situations in the past where companies will want to access the market very quickly. They need to be realistic on how long the process can take. And there's not a cookie-cutting answer that says it's going to be X months. It's really going to be fact-determined, but to be realistic in your assessment. And number 4 is that there can be various reporting issues, legal issues, that if your company is going to have, let's say, complete an offering by a certain time to comply with requirements in Brazil, that they discuss those issues with the legal team at the SEC. They will work with the company to try to accommodate them as much as possible. Number 5 is to identify any accounting or financial reporting issues and address those with the accounting staff as soon as possible. The company could have made an acquisition for which they might not be able to obtain financial statements of the acquired business that would be required by the SEC's rules. They can discuss that particular fact pattern with the staff, and they may be able to obtain relief from that requirement. The other number 6, and this is an issue where, again, you're going to be working with lawyers and other advisors. And while the document is basically a legal document, I will always say draft for the investor, not the SEC staff. The objective of the disclosure in the registration statement or the annual report is not to benefit the SEC, but is to be used as a communication guide or communication document for the investor. Number 7 is to review the document for consistency, both internal consistency and external consistency. One of the things that I have seen is that when the document is prepared by multiple people, is sometimes you'll have disclosures within the document that are inconsistent. Information in the financial statements may not be consistent with information in the MD&A or the discussion about the business. So it's important to make sure that the document is consistent throughout. It's also important to make sure the document is consistent with external communications. The staff will frequently look at a company's website, and they will look to see if the disclosures on the website are consistent with what is included in the document. Number 8, always ensure the registration statement is complete before submission. If there are open items, you should discuss those with the staff before submitting. Number 9, there can be times when you're engaging with the staff that issues can be contentious. Always engage with them in a professional and courteous manner. It's always best to do so to make the process as smooth as possible. And the last one is always view the F1 registration process as the beginning and not the end of being a public company. A lot of work will go into preparing that registration statement, a substantial amount of work. But again, that's just the beginning of being a public company and not the end. And those are my top 10 tips, Kieran.
Okay, that's great. Thanks very much, Wayne. And maybe I guess just on that and maybe if you just comment on some of the more sensitive disclosures in the financial statements and outside the financial statements that give rise to, I guess, discussions with the SEC and concerns. I don't know if you.
Kieran, one of the things that the SEC does require certain disclosures that companies may not want to provide. In certain instances, like for example, they do require material contracts to be filed. There is a process for obtaining confidential treatment. Won't go into that, but if there's certain information that is, because the process has been greatly simplified, they can redact information in certain instances where it's viewed as proprietary. If you have a contract that talks about prices, et cetera, that information can be redacted. But there is other information that companies, for example, about segment information, may not want to provide, but are required to provide. And in those cases, it's the company has to be transparent, and they might have to provide more discrete information than they would otherwise have to provide. So it's really going to be fact specific. Some information can be redacted. Other information, of course, cannot be.
I guess a question for Guilaine. Any tips for companies getting ready for year-end reporting and what are best practices in terms of companies getting things right and avoiding last-minute issues?
Sure. Involving whether you are doing a new transaction or just recurring filers, involving anything, all the parties early on versus at the end is always a good thing, especially if there's a new significant transaction close to year end. There is always some discussion about a lot of more transactions happening. So involve the different person in the company and your auditors and the reviewers, so everyone has a chance to early on to discuss those issues. Think about any of the impact. I think there was a lot of questions here about COVID-19 and the environment and what that means. So it's I see a lot of discussion on having a new risk factor in the annual report around the impact of COVID-19. A couple of points I would make here. One is one of the issues is sometimes people say it could impact us, and being very generic. I would say, how is it implemented and what is really the impact? And have you not been already impacted by the environment or COVID-19 or anything in your business? And if so, it should be pretty specific so an investor can understand what are the impacts. And similarly, it should be covered in your financial statement on a consistent basis. So consistency is very key. I think Wayne mentioned it just before in the consistency of the documents. There's, in my experience, a lot of people involved in reviewing or preparing different parts of the annual report of the 20F or the F1. And we note so many times inconsistency between one part of the filing versus the other that I think it's very key that there is a one centralized, review done for consistency. So a couple of the few things as we prepare for year end. And then I mentioned there was a lot of discussion for non-GAAP. And I think similarly, if you're thinking about it, any new non-GAAP or reviewing your non-GAAP, and especially with, again, back to the impact of COVID-19, where people have been thinking about that, engage the different person in the team here to discuss, whether it's viewed as appropriate or not, and the disclosure are really, impactful for the investors. So I think there were a few things, Kieran.
Okay, and I guess any last comments in relation to accessing the U.S. markets? The company thinking about accessing the U.S. markets last last comments, considerations.
My last point for me is we definitely have a lot of information. We're always happy here to answer questions after that. I love to work with Brazil, so it's, as you know, I'm missing a trip this year, so I wish I was there in person. So I think we're just available for questions, and don't hesitate. It will be my last point, Kieran.
Okay.
I agree with that completely, Kieran. The U.S. markets are open, and we'd love to see more Brazilian companies register.
Okay, that's great. Thank you very much, Wayne and Guilaine, for your time and your comments. I think with that, now we're going to go into the questions for the exam that we have on the requirement for the exam requirement for local training. So, thanks very much.
Okay, thank you very much.
Thank you.
Thank you.
Thanks. So we're just going to come. Okay. I guess we're just going to put up here that our next one's going to be on October the 7th for international offerings. I guess in international offerings of securities around the world and on different types of offerings. I'm going to discuss that on October the 7th. I guess with that, we're already going to start the questions here. So I guess so. The first question is as an FPI, you can sell securities in the U.S. by a 144A at American Depository Receipt Level 2, American Depository Receipt Level 3, or all of the above. So I guess what are the ways you can sell securities in the U.S. Via 144As, American Depository Receipts, via American Depository Level 2, American Depository Level 3, or all of the items above. So it's one of the topics that we discussed. I guess in the and then I guess if you just want to put in your agenda that on October the 7th we'll be having a discussion on international offerings. I guess and with this we're going to have Katerina, Guilaine, Kyle, and myself. That one's going to be in English as well. The poll for the first question, I guess so. This first question already ended. For those wanting certificate for CRC purposes, you have to get at least 3 of the 4 questions right. So now we're just accumulating the answers for that. And here are the contacts for the people who are presented today. So yep. So in the first question, the vast majority of people got it right. There were all of the above was the right answer. So we're going on the next one. Which information is not needed to determine whether the company is a foreign private issuer? So option A, more than 50% outstanding voting securities. What's the issuer directly or indirectly owned by record by residents of the United States? The majority of the executive officers or directors are United States citizens or residents. More than 50% of the assets of the issuer located in the U.S. or the business of the issuer is administered principally remotely. So you have to choose which one of those options is not a requirement of a foreign private. I guess is not one of the exceptions related to the definition of the foreign private issuer. So it's so you have those 4 options. So on the slide here, you have everyone's emails. You also have the, if you want as well to receive invitations for future webcasts, you can send us an email on the BR Novice Perspectives, and then we'll include you in the future invitations for our future webcasts. Actually, the poll's already ended for this question, so just give us a minute and the system will process the answers. Yeah, the majority of people got it right. Is that the item, the last item, which is the requirement to do remotely, is not one of the items being considered. Which of the following is the most significant failure? Is the most significant type of failure in internal controls over financial reporting? So which is the most significant type of internal control over financial reporting failures? Is it deficiency, a significant deficiency, material weakness, or alteration of disclosure? So what is considered to be the, if you like, the worst type of control failure that that normally leads to that normally I guess creates a report, I guess would impede the issuance of a clean opinion over ICFR. I guess not just some more comments. This webcast was recorded. We're going to make it available on the website. Those who want it can just access our website to get it. And also, if anyone needs the slides, just let us know. I guess with this, the poll has ended for this question, so we're just going to give it a minute for. Give it a minute to go to the next one. Yep, majority of people got it right. It was material weakness is the worst type of control issue. So we'll just go on the last question. Which of the following is not an indicator of material weakness in internal control over financial reporting? Identification of fraud, whether or not material on the part of senior management, restatement of previously issued financial statements to reflect the correction of a material statement, identification by the auditor of an immaterial misstatement of financial statements in the current period and the circumstances that indicate that the misstatement would not have been detected by the company's internal control over financial reporting, and ineffective oversight by the company's external financial reporting and internal control over financial reporting by the company's audit committee. So there you have which one of these so the question is which one would not be an indicator of a material weakness? Identification of fraud, restatement of previously issued financials for material error, identification by the auditor of an immaterial misstatement, or ineffective oversight by the audit committee. And it's just arriving at the end of the time here, and choose one of the 4 options. So that the correct answer was the identification by the auditor of an immaterial misstatement. Obviously, if it was the identification of a material misstatement, it would be an indication of a material weakness. But here it was an immaterial error. So the majority of people got that right as well. So I guess now we're just going to repeat the questions for those people who, didn't get 3 out of the 4 questions correct. We're just going to repeat the questions here. So we're just going to go through them again quickly. So I guess the first question was: is an FPI can sell securities in the U.S. via 144A American ADR level 1, and B ADR level 2, C ADR level 3, or D all of the above? and these questions are only necessary for those people who want a certification for the purposes of Brazilian CRC training. The CRC requirements for this year require us to issue tests whereby participants need to both be on the webcast for at least 3/4 of the time and also get 75% of the questions correct. So we're just going to go, I said, through these questions the second time for those people who want a certificate for CRC purposes. So I guess the polling is closed in this one. The correct answer was D. So we're just going to just recording the answers here, and then we'll just go to the next question. And for those who want to receive the future invitations, just send us an email on the PR Novas Perspectivas email. So which information is not needed to determine whether you're a foreign private issuer? The number of outstanding securities the issuer directly or indirectly sold in the U.S. Majority of executive officers are U.S. citizens or residents. More than 50% of the assets are located in the U.S. or the business is administered principally remotely. So I guess the question is which one of those is which piece of information, which one of those 4 items is not required to determine whether or not you're a foreign private issuer? I guess with that, I guess that's number 2. And we should have so that this webcast was recorded, should be available on our website, I guess by tomorrow. Okay, so the poll closed. The correct answer was D. It's not relevant whether or not the business is administered remotely or not. I guess with that, we just have the last couple of questions. And as and feel free to send us questions or suggestions in terms of future webcasts. Question number 3. Which one of the following is most significant failure of internal control over financial reporting? A deficiency, significant deficiency. C, material weakness. Or D, alteration of disclosure. Which one of these is the most significant? Is considered the most significant failure of internal control over financial reporting? So I guess in terms of those items, I guess which one of those is considered most significant for ICFR purposes? And this is the second last question. So so as soon as we finished, the next question, we're going to end the webcast. So we're just coming to the end of the question here. Okay, so the time is up and this poll has ended. The correct answer was material weakness. With that, we're just going to go to the just recording the answers and then just one more question to finalize the webcast. So I guess thanks to everyone who's joined us today, and especially thanks to our guests, to Guilaine, Wayne, and Christiano. And now we have the last question, which is the following is not an indicator of material weakness. Detection of fraud, restatement of previously issued financials, identification of an immaterial misstatement, or ineffective oversight by the audit committee. So which one of these is considered? Which one of these is not an indicator of material weakness? This is the last question. I guess as the time runs out here, I said thank you very much for everyone for listening in. Our anyone who wants to receive invitations to future, to future webcasts, get an email below. And please don't forget, we're going to be talking about international offerings on October the 7th at the same time. So put that in your agenda. I guess with that, we've come to the end of the webcast. Thank you, everyone, for your participation. And with that, we'll end the session. Thanks again. Bye.